Thank you very much, Kamala. I appreciate the invitation to join you today, and I'd like to thank Peter Elwin for inviting me as well. Appreciate that very much. It's my honor and privilege to have the opportunity to speak with you. It's something that I say sparks a thought that lasts, or even better, an action that elevates, and I've made an impact today, and I could call it a good day. I'd like to state here at the onset that while I do now head two companies in the battery metal space as of the last 14 months or so, I've been a broadcast journalist for 5 decades, with 25 of those years primarily in the resource sector. I've been asking questions of the experts, each well steeped in knowledge of precious metals, base metals, industrial metals, and of course, battery metals. Financiers, geologists, analysts, and company CEOs have been on the other end of my microphone. What we all know, all of us in this virtual room today, is that no matter how expert in their realm an individual is, no matter how well versed in knowledge of markets, commodities, and money itself, an expert may be, no matter what trends have transpired or have yet to take place or be predicted, you don't know until you know. You just don't know until you know. Opinions are just that, they're opinions. Few saw a pandemic coming. Few saw a war in Europe now in the early 21st century. Fewer still can predict how this very year will end for certain. Therefore, I think that those experts that predict, and I may or may not be one of them, those experts that predict the price of gold, for instance, can be counted on to assert that the price or trend that they forecast with any guarantee of certainty will be correct for any given period of time. Yes, we can point out that since 2001, gold has increased at about 700% in value. We can look back and see the numbers, do the math, and arrive at that reality. And if you've held gold for that amount of time, you've 7x'd your investment. How is that not winning? How is that not an amazing return on investment? But look at the price of any commodity in the last 20 years compared to what it's worth today, and what do you have? Has real estate in California seen a 7x return in 20 years? I would wager a not quite on that, although it has done extremely well. Has the price of fuel seen those multiples in 20 years? Now, probably. Food? There's a long list of comparisons that I can make to prove this out and give or take an interest point or a multiple. Does an ounce of gold hold the same value now that it did 20, 30, or 40 years ago? Will that ounce buy the same thing now that it could then? It buys more. You can sell that same ounce at 7x what it was worth in 2001, and you can probably buy a lot more for that ounce than you could in 2001 if converted to cash. Does the theory of buying physical gold as a hedge against inflation and endless quantitative easing make sense given the previously stated logic that this is somewhat humble broadcast journalist spoke of? For the long term, I believe so. Yes. You can also sell that used car, that home, that Rolex watch you can't even find in the stores anymore, and make a hefty profit. And perhaps soon you'll be selling provisional goods, for instance, food and coffee to your neighbor for more than you paid for it. Should we have all gone to Costco or Sam's Club to stock up on just about everything for days yet to come, when a good part of the world may see famine and many shelves in the US are in some cases bare? What should we be buying as investors right now? What should we be investing in? Food, fertilizer, or gold? Well, let's talk about gold equities, for instance, in the junior mining space. The average investor, unless they are in on the game of market manipulation, could lose and has lost when they don't understand the cycles of commodities like precious metals, primarily gold, specifically junior mining equities. A real estate investor cannot win. A retail investor cannot win unless they know these cycles. Gold is promoted heavily at lows, more heavily as it upticks until highs are reached, just as we saw recently when it climbed above $2,000 an ounce US. And then short it, baby. Short that gold until those that manipulated that market, lining their proverbial pockets and ready to do it again for the next time, are out. That's a long-term volatility wave, not a short one. If you look at the longer volatility waves, you're only looking at the overall chart for the last year to 2 to 5 to 20 to 30 years. And then the arrow just goes up as inflation goes up. So here you have a market of smart winners and not so smart losers, both calling themselves gold bugs. The smart ones recycle the cycle, and the not so smart ones lick their wounds and go away, coming back years later when they forget all that they learned the hard way, and they get excited about gold all over again and perhaps lose their investment. When gold elevates to $1,900 or $2,000 an ounce, and then back down to $1,000 to $1,200 an ounce over a period of years, then crawls up again, that's a long volatility wave. Sort of like a figure eight on its sideways, an infinite wave. It's an infinite repetitive wave of winners and losers, winning on the back of losers. That's everything tradable. Buy low and sell high. Why would a generalist invest in gold right now? Either the metal or the commodities, the stocks. It's dangerous. And how many buy at the highs? Quite a few, I'm afraid, mostly the losers. Here's the thought. What if you and a group of like-minded individuals, people here today, found a gold project that can produce an ounce of gold at about $600 an ounce in a $1,200 an ounce market or $1,000 an ounce market? And I think we're currently today at around 1,820, 1,830 US. If you privately own the company that produced it, what if you're a corporation or a collective combined, perhaps with government allegiances, such as yours involved in the production of gold at $400 to $600 to $800 an ounce in a $1,000 to $2,000 an ounce market? What could that do for the people, if we're being generous, the people of that country or countries involved, the jurisdictions involved? What would that pay for? Well, that government would actually have to engage in capitalism, making money. Do governments do that, or do they just tax and spend money? Assuming that you still have to pay for food in this world using currency, couldn't the sale of gold either directly or converted to currency buy things like food, even housing? Does anyone think about that? Are we really thinking about how gold could be used to activate a prosperous future in our collective economic development, instead of how to manipulate the market only for one's own greed? Now, greed isn't all bad. Benevolent greed is good. It's a motivator. If while we are looking to grow our own wealth, we include others in the process, and I'm not talking about welfare, then everyone wins. You win, I win. Not just me, not just you, everyone in the jurisdiction wins. The people win, much like the people are winning in Guyana right now because of oil production over there. There's new wealth that's never been there before, and everyone's benefiting from it. Not a bad model. Can $600 to $900 an ounce gold be produced in significant quantities? Notice I keep changing that number because you don't know what the number is. With enough forethought and creativity, it can be somewhere. Would any of you invest in the company that can produce at that level? Sure, you might. Does it then make sense as an investment? Could. Does it really make sense as a hedge against inflation? It could. All this talk that fellow journalists and pundits have been spewing all these years about $2,500 gold or $5,000 an ounce gold has all been nonsense and part of the manipulation until, of course, it's real and those prices are in place. Don't put a month, a season, a year, or even a decade on it. It will happen someday, right? Why? Inflation? The grab for gold by countries? Years ago, the BRIC countries, Brazil, Russia, India, and China, were the motivators to move gold. BRIC being the acronym for Brazil, Russia, India, and China. That was the pitch almost 20 years ago. Guess what? Russia and China hoard gold. Russia goes to war, and the West puts the stranglehold on the ruble, their financial markets. Got gold? Sure enough, Russia has gold. So they sell that gold they've been hoarding for times just like this. The market gets flooded. Prices decline. Equities go way under. There are so many reasons not to invest in gold unless you're involved in actually producing very economically, which is almost the only way to invest that makes sense and limit risks. There are so many reasons not to invest. Let's look for a few good ones. Another one besides owning a gold company or shares in one that produces gold. Stay with me. Not only has the gold market been manipulated, but there's a bubble burst on nearly everything but food and energy right now, which in my opinion is a cash grab, even before supply chain issues take full effect. This is a cash grab. Prices on everything in the US are high. Lots of pumping and dumping going on almost effortlessly in the junior end of the gold equity space as well. The wonderful digital currency Bitcoin craze flamed on and is now flaming out. We will see an exact repeat of the internet bubble that killed internet stocks and fortunes and many companies just before and around the time 9/11 happened, oddly enough. And that bubble popped stocks across the board. But what emerged? What emerged? A solid internet and all that came with it, including smartphones, all the apps, streaming services. We live by the internet. But the internet and internet stocks were bad investments before the bubble, for the most part. But not all were shaken out until we found something that worked, including the most part, this virtual conference right now over the internet with the millions of Zoom calls made over the last 2+ years. Where am I going with this? Digital currency will replace fiat currency. Paper money and what it represents will die. It finally has to die. We've been talking about it dying for years, but we are here. The dollar's not going to die, but the way we've been exchanging it will. I just traveled to Europe with the equivalent of $300 US cash with me over 2 weeks. Did I need any of it? No. I took the cash with me out of habit because I'm a man of a certain age who's used to traveling with some cash. Well, I hear that inflation is hitting every country right now. An interesting phenomenon occurred to me. While inflation in Los Angeles County is prohibitive for most people to live their lives as they were even last year, the strong American dollar has more value in play in Europe, even England or Sweden. Yes, it's cheaper in London and Stockholm right now to eat and do business than Los Angeles. Strong dollar, not domestically, but overseas. It's a great currency overseas. The yuan and ruble will never kick it to the proverbial curb. The dollar is here to stay. Weak gold compared to inflation and the cost of money makes no sense, but there you have it. How do you really stop inflation once and for all without doing what was done in 1980 by raising interest rates, which is not attractive now at all? You tie digital money, because paper money will die, remember, you tie digital money to gold, period. The cost of gold rises when the cost of money stabilizes, they say. The experts say there's only so much gold in the ground on Earth. Well, that's kind of a good thing here for these purposes, that the entire amount of gold in the Earth would fill a gymnasium or a football field, or I don't know what the reference is specifically. You tie gold to currency in each and every country with a so-called finite amount of gold tied to money. Don't you kill runaway inflation while making that gold very valuable at the exact same time? I actually believe that unlike land, though there's probably much more gold in the ground than we think, there is much more gold in the ground than we think. Unlike land. We could leave it in the ground and not take it out, using a proven resource as its own gold vault without ever having to melt it into bars, without that cost of production, bringing it into a vault or wherever you want to store it. So as a consumer or a human being on the planet, if you own any denomination of digital currency, you own gold, just like it used to be. That's the system we have to create economically. Gold funds tied to gold give way to currency backed by gold. These funds now in place can help craft policy by the implementation in concert with global governments of such. Repeat it enough times out loud and it becomes a reality. Intention becomes reality in all things, good or bad. Bad intentions become bad actions and realities. Good intentions become good things. The wealth created by the mobilization of the production of gold tied to currency in such a way that benefits governments in the Caribbean, like some of yours, for instance, not to mention the rest of the world, providing all with wealth, and I mean all, enough to farm, to build homes, to clothe and feed, purify water, generate energy. Production and full integration of gold into currency can pay for everyone and everything. There's enough abundance in the ground for all of us. Earth is abundant. Figure it out. You folks are the experts. Work as a collective to make it happen. If you don't prepare for the worst, prepare for what is beginning. Food shortages, energy shortages, inflation, critical supply chain issues. It's going to take perhaps 10 to 20 years to catch up with what's coming, especially when people can't pay their bills or even eat. If a recession comes like we've never seen before, because that perfect storm of bad weather has become a real possibility, an endless hurricane of global failure may be upon us. But does it have to happen? That's how I would frame gold, and that's how I'm framing gold today. The answer from the beginning of time until the end of time: gold is money backing everything. Let's get the family funds and sovereign wealth funds to work together with each other and work with world governments, work with the people to solve this financial crisis that won't go away, and remake it so it never happens again. Spread the wealth without taking it from wealth creators. If wealth creators include all in the process of creating that wealth, you've given ownership and a partnership to all in abundance. That's how it should be. This is not charity, it's earned equity. You teach equity by involving everyone in the agriculture of gold. You teach people how to farm it. You can't eat gold, but it can buy a lot of food and or the ability to grow it. What will come out of this market collapse, this Bitcoin crypto tech bubble burst? Something amazing, something so good, only a spot on futurist can describe it or begin to. We don't even know. Be a part of it. I've spelled out only in part how gold can be salvageable as an investment, as the commodities have taken a hard hit lately and for the last year or more. If there's a global recession and everyone who has cash sits on it and doesn't spend it, like several fund managers I know currently who are sitting on 95% cash, then there's no market for anything other than food or entertainment, period. So I personally don't see any turnaround or upward trend for gold for a while. I could be very well wrong, and I could be wrong tomorrow, and I hope I am, and I pray that I am, but there is lots of hope. Let's set gold aside right now, can we? Now that I've given you real action mandates for gold integration, let's set it aside and talk about the energy supply and demand stranglehold, which we are seeing for that supply. As I've said, I've been covering the resource space for about 25 years now as a broadcast journalist. I came to the space organically, basically falling into it from a background prior in news, entertainment, and agricultural radio. I didn't seek it out, it just happened. I happened into it. Like all of us in the space, for whatever reason, we're here. I found work with skills I had built over time in radio broadcasting, sales, and made it my own. For some reason, I decided and really felt that I should take advantage of the many useful collections I made over these past 2+ decades and run a public company or two in the sector. Why not? Everybody's doing it. At first, I thought I'd do a gold deal, but for reasons I just explained, I couldn't justify the risk not only to myself, but to investors, given the precarious market we're in, unless I enter the game as a near producer, and I'm just not that person right now. I knew I wanted to do something, or that I had a duty to put together a company given the connections I had and the desire to make use of them in mining. We must make use of the connections that we have in our lives. Through my years of working in the sector as a digital audio resource guy, a radio guy, I formed a relationship with a company called EMX Royalty Corporation. That relationship began with something as simple as a friendship with their VP of Investor Relations, Scott Close, and then their CEO, Dave Cole. We have similar likes and a mutual appreciation of each other. To work together, first, you become friends. They became a sponsor of my global radio show and podcast, and I learned so much more about their company through interviewing Dave and their VP of Exploration, Eric Jensen, one of several economic geologists on the team. I became friends with senior geologist Jeff Edelen, who will speak next. I wanted to do something with them, but where? What made sense? What could I count on in a risky resource market? Where is going to be the biggest supply and demand need? Well, in the summer and fall of 2020, I deemed it to be battery metals in a jurisdiction that had a historic mandate for clean energy and strong historic infrastructure, well before Canada and the US, for instance, and political times that were not as stringent with regard to economic social governance or ESG, as they are now, 2 years later. That jurisdiction with, again, historic infrastructure is Scandinavia, specifically Sweden and Norway. I wanted to work in a jurisdiction that was already familiar with promulgating green initiatives and had a growing need for that resource, along with a large underdeveloped resource of battery metals such as nickel, copper, cobalt, and PGEs in the ground? Well, EMX is the largest landholder of optionable resource in Scandinavia. And through the help of EMX senior geologist Jeff Edelen, who again is speaking here shortly, my company, Martin Laboratories EMG, or Energy Metals Group, has an expansive 250 square kilometers of battery metal assets in Sweden and Norway. There are a plethora of battery manufacturers and automakers in Northern Europe who absolutely need what we can offer potentially with some of the best ground in a way that first serves the people in the jurisdictions as it secures Europe's and beyond energy storage needs. We need your help if you're able to participate. Perhaps I should say, instead of asking you for help, let me ask you here in this venue, in this domain, if you'd like to have ownership in our company, in our quest to provide plentiful, clean, responsible energy storage paired with energy generation, not just talk about ESG, but to be in it along with me, with us, with EMX and our current investors. With such a large land package, we have a great deal of exploration development ahead of us. Furthermore, we consider ourselves, Martin Laboratories, a global energy metals group. In our group, we have a large copper silver land package in Eastern Canada. We would love to explore opportunities in the Caribbean region, perhaps involving nickel, copper, cobalt in that area, as I know it exists there at any stage of development, as long as it's economical or can be economical. End users, of course, could be located in the US, Latin America, and Europe. I'm positive that this region, your region, is underdeveloped with regard to exploration and development. Not entirely, but there's still lots of upside. The connection with global funds, resources, and mining companies such as ours, and those of our peers, can become stronger beginning today. Let's make the Caribbean one of the top jurisdictions to do business globally. Perhaps it already is, but spreading the knowledge that it can be is a job for us all. It's been underexploited in a positive way and perhaps undermarketed. Had I not been invited to speak here today, I, as a journalist, would have remained drastically unaware of the potential. We'd like you to join us now at our beginning, essentially, taking equity with the prospect of end user participation at some point, offering a potential return on that investment. Some of you have mandates to make a difference in the clean tech, green tech, ESG space. Consider using a portion of your investment capital in that realm with us. Again, investing in yourself, and more importantly, that of your constituents in creating more energy independent on this planet. Direct a fair portion of that wealth accumulated here in countries such as Guyana and beyond. I'm just using Guyana as an example, for instance, steeped in oil, and the people enjoying the benefits of that crude right now, that light crude, as a people, a region, a corporate collective with a governmental mandate, invest in global energy production and supply chain, critical supply chain, by doing it while it's still early and at a bargain price, potentially. A great transfer of wealth has indeed begun and is now well underway. For this planet to truly survive, it must be organic in a way that's beneficial to all, to be created and shared with the citizenry of the world. It starts today, here with us. Let's continue to get your citizens further involved, your young people in the Caribbean, educated, trained in mining and finance, inspire them to be a part of the further electrification of this planet. Thank you. And thank you to Mr. Peter Elwin for connecting us today. I appreciate your time.
Thank you very much, Ellis. That was certainly a very wide-ranging discourse that gave us a lot of food for thought. Particularly what stuck with me is the whole notion of how do we treat with inflation, which is something that is, facing all of us right now, and how gold may be used in so many ways, though it's not something for the faint-hearted, I'm seeing. But also thank you very much for the invitation for those of us in the region to also be able to join in that effort. I'd like to invite Jeffrey now. Jeffrey Edelen, as Ellis just said, has a lot of experience and is part of EMX Royalty, which is, a company that has a lot of experience that could guide us in some of our thinking in this respect. So Jeffrey, I'm going to invite you first for your contribution.
Yeah, thanks for that. So yeah, EMX participates in this idea of creating wealth, and Ellis is right. I'm just going to speak to some of the things that I think are important within this topic, rather than give like a sort of a speech. But at the end of the day, it's our goal and really our mandate from our shareholders to help create a value and create optionality for our shareholders. And we do that through the land staking process. We generate royalties and make strategic investments and purchase royalties. And we're sort of involved in the exploration phase with respect to royalties, strategic investments, and exploration projects. And that's where the most value can be created. Pierre Lassonde has a figure, many of you have seen this, it's the exploration and mining process value curve. And the value is really realized in over time, several different areas of this curve. And the one where it's steepest is the exploration process and the discovery process. So, I guess there's very few sectors. You can probably do it on Wall Street. Not everybody can do that, where you can kind of make a real tangible wealth, generational transformative wealth, 1 to 20x on some of these exploration projects. Now, does that have a ton of risk involved? Yeah, it always will have a lot of risk involved. But if you can identify the right commodities that you want to participate in and put your money there, gold will always be king. That's just the reality. Gold will always be king. That's my opinion. But battery metals, I mean, that's a more altruistic bet. It's a bet for your future, and you can make a lot of money right now. We saw it in marijuana. We saw it in crypto. I personally think crypto's not going anywhere. I think that blockchain technology and cryptocurrencies, Bitcoin, Ethereum, have a lot of value and intrinsic value. But at the end of the day, you can't really hold them, and you can hold a battery and you can drive it. And there's a future to be had there, and EMX wanted to capitalize on that and make sure that there was access to that for our shareholders. And Ellis is one of the instruments we use to generate this wealth for our shareholders is through Ellis, and we're going to make money on Ellis's company. And I'm personally invested in Martin Labs, and I'm also just invested in the future of batteries. And the cool part about this thing that I get to do is I get to go do the work and help realize some of those gains for our shareholders, and by extension for some of these countries too, Norway, Sweden, Australia, places like this. And I'll tell a quick story about Haiti, and that'll sort of that'll put us in the Caribbean space, which is where we are here. So, real tangible wealth. What you need for that in the mineral exploration process is you need a good foundation, and governments can help this. In fact, they're necessary. They need the good rule of law, and they need access to natural resources, and they need groups like ours that are smart and smart geologists and to help come in and stake the land. So in the anecdote I'll speak to about Haiti, that you'll see how this is really critical. And then Ellis said you got to involve others in the process for wealth creation to really occur. And that's really true. There's stakeholders. We call them stakeholders. It's everybody from each shareholder down to the guy, on the street corner that's gonna help potentially experience some of the creation of wealth that mining can bring to an area. It's governments, it's environmental groups, it's everybody. And to include them in the process is really critical. It's not just what you want to do. It's really, and I think we all know that this ESG, the term ESG, environmental social governance, these types of things, they're not going away, and we don't really want them to go away. We want to operate within the framework that provides the most upside for everybody. And you can't do it without each of the stakeholders saying, yeah, okay, let's go for it. So we need to educate everybody and tell them why natural resources are important. Like literally everything that you can see, if you look around your room, was grown or mined, and it produced, manufactured, and shipped to you. And, I don't love that. I wish things would just materialize out of thin air, but they don't. So, we need to build them, and we need to do it smartly so we can keep going into the future. And that's why we're doing batteries. That's why we're heavily invested in the battery space, nickel, copper, cobalt, these types of commodities that are really the future of power generation and movement in the world. So governments need bulletproof mining laws so that groups like ours can come in and work. Then after that, once we get the land staked, and once we get have identified a resource, and we do a lot of drilling, and we do surface exploration and geochemical analysis and sampling. And once we do all the steps that are necessary to create that, what we're doing with Ellis right now in the nascent phases of Ellis's company, once we figure all that stuff out, then somebody has to come in and potentially has to mine it. And there's a lot of issues that people have with taxes, and I understand some of those, and they're, I agree and disagree with some parts of people's thought processes are behind whether taxes are good or bad. But the reality is a lot of governments decide that they want to tax this first order this sort of first order process, but think of it as the mining process. So if you want to tax the miner, that's okay, you can do that. But really, when you're sort of taking away a catalyst, you remove a part of a catalyst there. And if you can't fully catalyze the reaction, then you don't get the products that you're really looking for. So what I would like to make clear is that the mining process has a downstream multiplier effect. Everybody will have different numbers for this, but it's several X. So it's just several X. Now this is we see this is just a fact. We see this that the mining process in places like in Haiti, well, it would have until the earthquake and some other factors derailed our efforts there. You can build, and this is in the DR, this is in Cuba, this is building roads and schools, hospitals, water, power, rail, access to all these things. And that just necessarily improves people's lives. So to create wealth, maybe we need to make sure that we have clean water. Maybe we need to make sure we have access to hospitals and a road to drive on. And we see this in Fiji, we see this in Australia. And mining, I'm from Montana here in the United States, and mining built almost all the roads that we use to get in initially, and also things like logging. It builds these roads, it gives people access to areas that they can then kind of go settle. I mean, look at it kind of from a frontier perspective there, but we're on a new frontier of wealth creation right now. So those are just the points I wanted to hit. And I'll tell a story about Haiti. So EMX went into Haiti early with Newmont as a partner, with Newmont Mining, and we, had a goal to look into the natural resource potential of Haiti, which is vast. And Haiti is a very underserved country. I think we all know in the Caribbean space that there are, there's a lot of countries that need some help and need some access to their own ability to generate their own wealth from their own resources. So altruistically, yeah, probably a little bit, but we also definitely saw a way to make money there and to help Haiti sort of grow and to try and help transform the country. And I really like that. I'm on a certain part of this political spectrum, and it's not a political issue for me, but I really think that if I can have an effort, if I can use my time and my skills, and we can generate wealth for all the stakeholders, the people of Haiti, I thought that was great. I want to put my efforts there if I can. And EMX is just the type of company to do that. In conjunction with the International Monetary Fund and the World Bank, we went in there with Newmont and at great expense to Newmont, in particular, as a major shareholder there, the major investor there. We attempted to help Haiti write bulletproof mining code so that we could actually explore for land and have an actual framework to do that. So a company like mine, we can't come in and stake land if we think that the resources will be nationalized, or we can't come in and stake land if we don't think that there's a path forward to the mining process, because otherwise we spin our wheels and we lose our investors' money. That's not how business works. So we went in there with the help of some of these groups, and we had the idea to create real tangible wealth for Haiti and for ourselves too. There's nothing wrong with that, in my opinion. And we were almost there. I think EMX's stock went to 350 US on the idea that we were going to be able to unlock and realize some of the potential of Haiti. We just saw, we could have worked for the rest of the life of the company in Haiti. There's so much there. And what that would have looked like for the people of Haiti, it's hard to say. I think it would have been something special. And then the earthquake hit and that got derailed. Newmont purchased our interest there in exchange for a royalty. You can look up that news release. And at the end of the day, we did okay for our shareholders there, but we were unable to bring to fruition the actual real value creation that EMX brings to bear for places elsewhere in the world, like in Sweden and Norway with Ellis's company. Just a good example. So, without a bulletproof mining law and with a with egregious taxation schemes and things like this, we can't really help participate in this process. So I would encourage everybody to think about the incredible natural wealth. As a geologist, we talk about the science and the way that the rocks are, but there's an incredible amount of wealth, trillions and trillions of dollars. in the Caribbean region. And we're really excited about the Caribbean region. Not a lot of people understand how to operate clean, safely, and I keep saying creating value, but to really unlock potential, you have to do things right. You got to do them right from the beginning. And you know, Haiti was a good example. We really were going to do that in the best possible way. And you know, you got to go back to the drawing board, I guess, and recreate this process and improve it over time, each iteration. And that's what we do. I would encourage you guys to check out EMX if you want to see EMX. We're everywhere. We're a major landholder in several hemispheres, and I think we're the #1 landholder in Sweden, and maybe #2 behind Boliden, the de facto sort of state. It's not really a state-run mineral exploration company, or group, but they definitely have been the oldest, long-lived generator of wealth in the Scandinavian region with respect to mining. Other companies, Lundin, Dragon Mining, things like these companies also do a good job. And we provide those projects by staking land, realizing that the battery space is going to be really hot. And sure, do we still go stake lithium when we think lithium is going to be the next big thing? Sure, we can participate in that. We're probably better than the next group. We're, in our opinion, definitely better than the next group. So the land that we stake, our shareholders and our stakeholders can sleep well at night, knowing that we've done the very best that we can do within our capacity, our capabilities. And then, you know, we turn those around and monetize those assets after the exploration process, vending projects to the most capable partners towards the mining process. We do that in very effectively in multiple commodity spaces worldwide. And we were in the Caribbean, and we have royalty interests and royalty holdings there. And I would love to go back, and we will be back there shortly. There's some new stuff coming up. But for that to happen, for us to spend $1 in the Caribbean region versus in the Fennoscandian region in Northern Europe, you got to show me that that's a cheaper dollar. And I'll go there and I'll spend our money there, and I'll help you guys, or we'll help each other unlock value for each other. That's a nice thought. It's really true. We can do that. But we need tax regime or tax structures and things like this that make sense. And we need access to some of the land. And we can do it with a lot of rules in place that make things come off in the best way that they can, clean, respectful, things like this that for each of the stakeholders really that they can be proud of. But we have to have good laws for access to land, and we have to have good taxation schemes. And then we can all make the world a better place. And it sounds rosy and fun, but it's really true. We can really make the world a better place. And I think the battery revolution, I'm very excited about that. I don't know if anybody wants to really count out the internal combustion engine. That thing's been pumping out energy and emissions for a number of years. But I think we all see the writing on the wall. And it takes a critical mass to get stuff like the battery revolution over the hump. And we're certainly on, if we're not already there, it's within sight, it's within a stone's throw. And there's no reason the Caribbean region can't be a leader in generation of wealth for more of the underserved countries that are there. Certainly places like Jamaica have an incredible amount of resources. Haiti, the Dominican Republic, Cuba, that's a different story itself, but it's just fascinating to see how much is actually there. And people think of it as this, people don't really understand that it's a real, the jurisdiction itself has incredibly high potential, super high upside, tons of upside. So I'm really excited about being able to come speak here and talk about what EMX does and what we do with Ellis and with Martin Laboratories. But moreover, I'm just really excited to get the opportunity to look into the idea of coming back into the Caribbean and to give it another shot. And EMX is that type of company. We don't really quit. So I hope to see you guys on the other side of the rock outcrop sometime soon. And thanks for letting me talk. It's been a pleasure to see you guys and to attend the conference and participate. Thank you.
Thank you very much, Jeffrey. And yes, those idea that the region itself does have a lot of natural resources, which may be, as Ellis had said, underdeveloped, underexplored, which may allow us many opportunities to be able to grow. But that the real key to all of this is collaboration And Jeffrey, you did mention that it can be a very profitable venture. And, you know, there's nothing wrong with profits at the end of the day. And it's something that Professor Garrett has also been clear on, that it's not just the environmental and the social and all that. With our organizations, we also need to be entrepreneurs. We need to be creative, we need to be innovative, because entrepreneurship is what's going to help us to be able to do these things that impacts our environment in a better way than it's been in the past. And, you know, it can be a wealth generation type activity while we're doing that as well.
Can I say one thing to that, just for the discussion of it? I think the risk of doing it is certainly needs to be quantified, but for me, the risk of not doing it is far greater. The whole world's about mitigating risk, but you know, you could change your future tomorrow and today. I mean, that fires me up. That gets me excited. That's why I got into this business. You know, make discoveries, create wealth. I don't want to not. I mean, I don't want you to not have money. I don't want to not have money. And money's money, but I want to be able to have access to clean water and food. I want my kids to be able to go to schools and, you know, be able to pay those teachers. And the only way to do that is together. So I liked what you said. I thought that was great. Yeah.
Thank you very much, Jeffrey. Well, I'd now like to invite Mariano for him to take the floor, because let's get from Mariano. Mariano at one time was a government minister as well, Minister of Energy. So he's going to be able to bring some very unique perspectives for us from the region. So Mariano, the floor is now yours. Let's hear from you with respect to tangible aspects of wealth.
Tangible aspects of wealth. Well, thank you very much for inviting me, and thank you very much for having confidence in me to speak on almost every subject. Unfortunately, I am like I'm like Ellis. You know, their opinions and that they can change, and certainly the circumstances change. So in certain situations, the opinion looks good, and in others, it certainly doesn't. Well, the issue with regard to wealth, and certainly wealth transfer, I think that in the last 25 years, certainly in the region, we've also seen the growth of entrepreneurs, certainly in a family wealth. And I think the fundamental issue is that wealth at the end of the day is family generated. And when we're talking about family wealth transfer, we're also talking about the maintenance of if you want, the family, and also maintaining their wealth over time. So the issue of choice between the multitude of opportunities which avail themselves are always the matter of risk. And in terms of where do we place our wealth, and also where are we investing? Where are we on the investment horizon? And from that perspective, I think that in terms of the Caribbean's taxation policies, we have not always been geared towards the type of wealth generation that is domestic, that is family, and that recognizes that that wealth is also mobile. And that people, whilst they may grow in one particular territory, and they may establish their roots, essentially sometimes they outgrow that and they move beyond the territorial boundaries and move abroad. We've also seen in our history a number of wealthy families, and literally following that particular rubric, migrate to other realms, and that the fortunes which they have made transfer hands. I was interested in what Ellis was making the point early on with regard to the markets being unstable. Unstable markets are a time when fortunes are made. Unstable markets are also a time when fortunes are lost. But the point is, what we look at is always those who pay attention in those difficult times. So that precisely as we're speaking now, in times of uncertainty, they are great fortunes to be made. And the issue is one of foresight. Where do we put our money, and what do we put it in? And how does that work? The one thing that I'm clear on is that family money is about succession and succession planning from that perspective. And I know that we're going to be followed by an attorney who has some background in that. But my experience has always been that the wealth creation process invariably is about maintaining the wealth and maintaining family and family strength. So the choice of investment has a lot to do with risk and where we are in that creation process. There are some periods within the family structures when we are talking about growth, and therefore the risk appetite is a lot bigger. In many ways in the region, we've come into focus, if only because those who have had the wealth have looked for opportunities to avoid taxation and avoid taxation in jurisdictions where they have well-developed taxation structures. So alternatively, they've tended to look at what one is considered to be offshore jurisdictions, although that term is misused because the jurisdictions which have all the jurisdictions, including the large countries, all have opportunities for wealth creation as well as tax avoidance. And those opportunities, I would have to say, are created as a methodology to recognize that wealth is always looking for home. Walter Ristrom made the point, I think, in 1984, when he said that there are only two kinds of money: money that is taxed and money that is not taxed, and all money is looking for home. So that you have the couple of issues. You have the issues in terms of looking for wealth, in terms of how do you make your fortunes, how do you get your fortunes to grow, and then protecting that wealth. There are two aspects. And those are the aspects in terms of where are we and where are the families in terms of that wealth creation horizon and wealth transfer horizon. So I think those are the issues that we need to think about from a Caribbean region. Our reputation has always been on the side, well, and not always. There was a time when historically we were known as to be as rich as a West Indian planter. Unfortunately, that time was approximately 200 years ago, and 250 years ago, and that time has changed. All right, so that we are no longer in the wealth generation process on the basis of plantation structure or alternatively one key commodity. Our commodities don't seem to have that allure, with the exception perhaps of Guyana, Trinidad, and Suriname, who are in a different type of commodities market, and that is the issue of hydrocarbons. Now, there are and have been substantial wealth creation opportunities which have taken place in the region, and those people are not well known. And as I spoke to one who was my client several years ago, when I talked about documenting his choice of investments, he made a very simple point to me. And I said to him, that people need to know the story of and how this can be followed. And his answer was very simple. All right, nobody knows, and I like it that way. Right, so that the examples that one could find, and there are examples that can be found of people who have done quite well in terms of the opportunities that are available to them and the methodologies that have been used to invest, or where they have invested their money to follow on from that. Now, interestingly, the conversation so far is about the investment in what one would call real assets. All right, now, the one thing that I think that we will learn, what I would have learned from some of the entrepreneurs in the region, as well as from those who are without the region, who have come into the region in a sense to look for other opportunities, the issue has always been, how do you generate cash? And how does your business generate? Ultimately, any business that you're looking at has to be able to generate wealth. And generate wealth invariably is assuming, how do we generate those units which can be invested into other things? Because no one particular area of business, I think that Ellis was making the point earlier on with respect to the experience or of gold. I remember as a student in London in 1978, there was a challenge. I was just around the oil boom times in terms of the Middle East. We were also in the middle of stagflation. And the person who won, many of us bought shares, and he did one thing: he bought gold. That's it, right? In his portfolio consisted of one item, gold, and he won the prize because gold was in its ascendancy at the time. I might add, the price of gold, I think, peaked at somewhere around $434 at the time, from a very low base. So, I mean, comparing it, I think that Ellis was talking about which one, what asset has grown by a factor of 7. Well, if we look at it from that perspective, it has grown somewhere between 4 and 5, but you would have to have bought in 1978 to be in that position. So that the bottom line is that wealth changes and the assets which generate wealth or capital gains also change depending upon the economic period or economic cycle in which you find yourself. And at the moment, for example, those who are in cash businesses and who have been generating cash have always been looking at, well, what else do I invest in? And what else is where am I going to find the gains that are going to carry me through? Invariably, you will find that they will never abandon their core investment. The best example of that, of course, is Mr. Warren Buffett, who has always avoided investing in what one would consider to be internet stocks or technology stocks, because he says he's never understood the business model. But he has at the corner, at the center of his wealth generation, of Berkshire Hathaway. The center is of the cash generator in Berkshire Hathaway is a thing called Geico, right? It generates cash on an ongoing basis, which certainly gives him credibility in terms of what he's going to buy and what he's going to invest in. And the reality is always whatever you're investing in is going to be built on your risk profile and also to what the possibilities are with regard to trending upwards. And that's one of the reasons why at this point with regard to opinion and what's likely to change is probably the best indicator. It's a risky environment. You never know which one. So what do people do? Well, they spread their assets around. Some of them are in real assets, some of them are in cash generating assets. And the answer is that people tend to invest in things that they know and that they're accustomed to. Certainly the one Caribbean billionaire or the Caribbean billionaires that I've been familiar with have all invested in the assets or the businesses with which they have understood. And that those decisions have always been very strong components of their investment horizon for the very simple reason that they've understood the business, whether the business has been in the Middle East, the Far East, in the Caribbean, or elsewhere, or in North America. The reality is they've understood the market and what the market requires for the changes that can be made, or the adjustments that have to be made with respect to the individual markets. And that having generated the wealth, what else do you invest in? What are the other alternatives and the opportunities you exist to take advantage of what one would consider to be the speculative motive? So that at its heart, at its core, and whilst I understand the importance of gold, and I understand the importance of terms of mining and mining attributes, and the importance of real estate, I don't think any sensible wealth advisor, will ever steer you away from keeping some percentage of your available wealth in terms of what one would consider to be physical assets. But at the same token, those who have generated wealth will always tell you, how can I use those physical assets to generate cash? And I think at the end of the day, one of the most critical issues, whether we're in inflationary times or not, is a cash generator, this core of your business, which allows you to make the investments at the margin. Now, those marginal investments, i.e., when I have extra cash, these are the things that I will do. These are the decisions that I will follow on. Also take into consideration not only risk profile, but also the opportunities for upside potential, right? And the fact that I have enough money to basically get into it. But the fundamental issue with regard to any investment, if you want, a sensible investor, especially those who have wealth to protect, is really what is your upside potential versus my risk. All investors will know that you will lose at some stage. You will always experience some degree of loss. But if you're batting, certainly in the region of 60 or 70%, you're likely to be ahead of the game, right? And that is the basis, for example, on which modern equity funds operate, right? They understand that they will lose money on one investment, but they also understand that they have to have a range of investments, and the opportunity for what one will do very well is what will carry me through. So the reality in terms of the investment horizon, certainly from those who wish to maximize wealth, from my perspective, in terms of from my limited experience, has always been to understand where the cash generator is to invest the profits from that cash generation business wisely in the event that that cash generation business is subject to external threat. So the fundamental position is that you need to invest in what one would consider to be real assets as some percentage of your portfolio. But the most significant investment is the investment in the business that works and the one that you are familiar with. And I leave it at that. Thank you very much.
Thank you very much, Mariano. That does make quite a lot of sense, that for persons, you want to know that you are invested in an area that you have a lot of knowledge about, because it helps you to be able to respond that much quickly to changes in the market. And that, of course, as much as we would want to always have some amount of investment in tangible wealth, that we have to have the consideration in terms of how quickly can it be generated into cash as well, if that's something that we need to address in the short term. So very, very good contributions we've had from our panel so far. Ellis, I want to ask you if there's anything that you would like to respond to, first of all, to the comments that we've had from Mariano.
Thank you very much, Kamala. And I want to thank you again, Kamala, for this great experience. I really appreciate the invitation. And Mariano, I can't disagree with a single word you've said, including do what you know and expand on that. So I wish I could no, I don't wish I could disagree with anything. Everything was just brilliant. So thank you. Got nothing.
I would like to have all of our panelists on the floor right now so that we can engage in the discussion. Also to remind persons that you definitely can put any questions or comments on the floor if you have any. Just let us know in the chat feature as well. I also want to invite Peter to come in and join the discussion, because I know this is an area that he also is very passionate about, and I'm sure he has a couple of questions that he would like to share as well. Peter?
No, indeed. Thank you very much for that extraordinarily profound and detailed and intriguing viewpoint, Ellis, and of course your expert commentary from Jeffrey, of course, giving a real practical example of what can be done under the spirit of collaboration in the Caribbean area. And that was the real reason why I thought Ellis and Jeffrey were perfect examples, because it's not us theorizing about what can be done. They're doing it in the real world. This is where they're invested. This is where they're focused, and it's sharing a how can do way. And Mariano, I can obviously see your brilliance as both a polymath and a specialist by way in which you could read through every single point and brought it together. I unequivocally believe that, of course, you need to focus on what you're best at. Assets, solid assets should comprise a portion of your portfolio, but then again, you have to also be generating the cash. What I'll just probably summarize for some of the people a few key points I pulled away from Ellis's discussion, and then maybe put a few some more depth to it. So definitely, I do agree. Gold prices for many years have been manipulated. There is a situation of cash grab. There is a pump and dump element to a lot of the communities that are there. I believe we are in a bubble in terms of some certain stocks and crypto, and we're seeing that correction occur now right before our eyes, and I would say you ain't seen nothing yet. The best or worst is still to come, depending upon whether or not you're prepared for that situation. Digital will replace fiat. What that looks like and the regulation upon this will be a very interesting time, and to what degree the central banks and the central banking model is going towards that. And just as inflation is obviously hitting many countries. What is interesting, and why I've been drawn back into the mining industry, and it's almost like Groundhog Day, as they say, a repeat from 08 and 09. I was dealing, of course, in a number of entrepreneurial businesses, but dealing also with a number of very large gold traders at the time. However, what I've seen now, a lot of the gold traders that through their very high level connections could not necessarily get the good prices they needed. So they were sort of forced into the mining space to get the volumes of gold that they felt they wanted to acquire. And I've seen very much a bit of a shift towards those parties that normally could get that ongoing supply. Now have had to shift to more a mining model and look at forward sales of gold rather than just getting a great price on lower quantities. Moving on, okay, as far as inflation, well, again, look what Putin did in the situation with the ruble. He tying the ruble to gold to stop its downward spiral. That's another perfect example. Of course, yeah, I like the point where you said spread the wealth without taking it from the wealth creators. And I've looked at this from many perspectives over decades. And what my big fear is this war of the wealth creators versus the wealth takers, the bureaucrats, the politicians, and those other people that think they're doing good, but what they're actually doing is actually stifling and wringing the neck of the very golden goose that can actually feed their voters and help them get out of this situation, because they unfortunately don't understand those 3 C's of collaboration, co-creation, and co-elevation. So that the serious situation is, of course, the wealth takers versus the wealth creators. As I've discussed in the previous discussions on the Great Wealth Transfer, going specifically on the movement of money, the Caribbean needs to consider incentivization, not just confiscation and taxation. Now, I think you do sort of understand that you've benefited greatly from some of the great structures you provide to world financial centers, but I think you're going to need to stay strong with this and now look at more of the incentivization, of course, beyond tax. A couple of other points as well, as I just touched on. Yeah, some traders have been forced to look at actually mining. One key thing, though, for example, when you elaborate upon your involvements in, of course, batteries and energy and the natural resources and rare earths, etc., is the beauty of it is, if based upon the company, if you know how to get in early on a mining transaction, do the proper assessment, you can get that 5 to 20x, which is like a tech return. And some of the companies that are more vertically integrated, where they're not just necessarily getting access to the mining, but they've actually got the tech component, that's where you can get a tech valuation. So you get, if you know what you're looking for, you can actually get the solid asset protection to a certain degree and the upside, which some investors aren't necessarily aware of how to do. And if you are a late buyer, when you're looking at something of gold, where you're essentially just buying essentially at the market rate, knowing when to pick the trend. And I think we're now in a situation where the suppression of gold has gone on for so long. If we do hit this next issue with the say the valuation of the US dollar, because inflation and stagflation can't go on forever, I think we could be, and again, this is not financial advice, just my opinion to keep an eye on. Even some of those late buyers that have looked at gold, even at the market rate, I don't think they're going to necessarily be disappointed over the coming years, based upon what seriously could be happening in the stock markets going forward. And yeah, and also as well, you can take, I like the other point, you can take a catalytic view or catalytic role as a miner. And I think, yeah, and I like that comment from Jeffrey. Essentially, the risk of doing something is one thing, but the risk of not doing it is greater. And do you want to look back at the opportunity cost and say, what if? That's my summary.
You said it better than I did.
But you said it first, so you got to get credit, Jeffrey.
Hey, let's collaborate.
Sounds good.
Thank you very much, Peter. So we have to look at as a region then, what are those areas that we may be able to collaborate with others and see how we can bring, you know, some of those experiences to help us to be able to develop further. Ellis, I know you've said that looking at the Caribbean is relatively new to you. I'm so happy. I know you keep thanking us for inviting you, but the truth is we're the ones who are extremely grateful that you will bring your experience to bear and share with us. But from what you have seen, are there any particular areas that you would say within the Caribbean region, you know, you'd like to see more movement, you know, some sort of development or focus?
Thank you for the question, by the way. And I wish I could say with truth that I was extremely familiar with the Caribbean. I'm not. I know I have sort of a macro view of it. Of course, I've traveled there, but I would think, you know, for how can we expand upon mining of nickel in places like the Dominican Republic, for instance. I know there's mining operations there, but certainly there's a lot more opportunity, and also connecting with the rest of Latin America. From a development standpoint of view, I'd like to see more integration with Cuba. I can't do that as an American citizen, but my company with offices in Sweden and England, where our assets in Scandinavia are domiciled, can. We also have a Canadian company, so I can do business with Cuba from a global perspective. And I think that's the best way to blow past any political issues, is just to make friends like we're doing today, and to expound upon that, and to offer a system that works, and let the government do what it will. Let that just lay out. If we start creating wealth at a granular level from top down and bottom up at the same time, then we can make those things happen. One of the reasons we have the word laboratories in the name of our company is we intend on connecting with end users or near end users or end users that are already there, so that we can generate revenue in the interim for our investors, and at the same time offer an exit for those investors at some point if we're acquired by an end user down the road, or at least a joint venture or some sort of dividend paying entity. And I consider myself a media expert. I have mining experts surrounding me, people like Jeffrey. I could use more in the financial world. We're not without connections in that area, and we're working them on a daily basis. But certainly I don't have the background that Mariano has, but I appreciate his background, and we could work together so that I don't need to have that background. This is an organic process. I accepted an invitation to speak in London, and I spoke there, and I met Peter. As a result, Peter approached me. That's organic, and that's the way I like life to be. You really can't plan for the wonderful things that are going to happen. You just have to be ready for them.
Thank you very much. Mariano, I want to ask you, I know you shared that, the government policies have not always been, kind of attractive in terms of this kind of development, but what would you say maybe some of the low-hanging fruits? What are the things that we may be able to do now that would allow us to have greater exploration of some of the resources in the region?
I think the first point, I think we have to recognize what those resources are. We tend to think of resources as natural resources, and they are if you want a right to do something. You would find that with very limited options or very limited opportunities, so ultimately a small number of people who are invested and ultimately have taken a position in what we would consider the hydrocarbons or hydrocarbon exploration. Interestingly enough, the ones who have in Trinidad haven't done it in Trinidad, they've done it in Texas. Right now, that's not news. They don't tell everybody what they're doing, but that's what they've done. The couple of people who I have had the opportunity to finance or to work with, who have been in business, their wealth creation is about ideas, and it's about the ideas that you get that other people find something that you have that they want. Right? The one perhaps was the most successful in the first instance in the Caribbean by being a very successful distributor, whereas distribution in the Caribbean has generally been given a bad name. And what he then became was an international distributor on the basis of one key decision. A Japanese firm wanted to expand, and he had done well with them in the region, and he did well with them outside of the region, in Latin America in particular. Right? He had no real Latin American background, but it was a combination of not so much a tax incentive, but an intelligent use of a taxation opportunity, which most people had thought was geared towards foreigners. And he looked at it from a completely different perspective, and he uses it as a mechanism to become one of the largest distributors in the world. Right? And he is literally without equal. you would find that many of the others who have done very well in the region have also been in the business of distribution, marketing and distribution, and have come up with unique models. But at the core of all of those models has been a cash generator. Each one has had a different, if you want, an engine, which has basically literally generated surplus. And the issue is, what have I done with the surplus? In all instances, and I only have experience with 4, so I could only speak with the 4. They all invested and continue to invest in sort of line of business approaches which were similar to the success, the things that gives them success. They didn't necessarily only do it in the region. In fact, quite frankly, that's one of the realities of their success story, that they replicated what they did well in the region outside of the region, if not in Latin America, in some instances in the Mediterranean, in other instances, well, 2 instances in Latin America, 1 in the Mediterranean and 1 all over the world. Right? He was really what you call very successful. He's come out of the business now, succession, and you see that the family, there were no successors in the family business, so he has sold out. He sold out his interest. So the issue is now, how is he going to turn over that wealth, and what else is going to happen, and who's going to inherit it? That's another story. But the key to and I think that we've as countries, we've tended to look for foreign investors. We've never looked at the opportunities in terms of what domestic entrepreneurship could do, right? With a little bit of latitude. And in fact, our weakness has been primarily because we've been externally generated, not looking at how we can replicate, how people can replicate their successes. And they're not going to be many, but the point is that they have a few who are well known, right? And I'm sure if we had to do a little conversation after we've come off, we'll all know who they are, but they have done well. And they have done well because they've understood what their core business is, and that has not stopped them from looking for other opportunities outside of their core business. They have invested in similar activities, but they've also stepped outside of that as well. I'll leave it at that.
Okay, thank you very much, Mariano. And of course, it's always exciting to hear about success stories, so that was a good one. So I know, Peter, you have an additional point you'd like to make, so I invite you in now.
Yeah, certainly. Look, there was a point that Ellis made as well about the diversity of essentially the skill sets with his media background. Jeffrey's obviously solid understanding of mining. Of course, Mariano is a polymath, but definitely you understand as well, business and particularly the government and governance around it. One thing that I noticed in this mining space, which is absolutely clear, and even with these sorts of trade shows that I've been to and many, many others, is of course, you've got very much a small and medium business entrepreneurial mindset amongst some of the mining companies, not necessarily the big larger ones, but we're talking, even if the assets are 200, 300, 500 million in assets under the ground yet to be extracted, they're still thinking like small business peoples. And I mean this with great respect to all parties, but I mean, I was just flabbergasted as to why the mindset was quickly list and get moving. And we're talking for tiny amounts of money, when all of a sudden that meant the deal was, potentially from a financial standpoint, massively compromised in structuring it in a flexible way. So I'm thinking from the mindset of a financial engineer and proper financial structuring on bringing institutional capital in. But with the listed structure, the mindset is that it's actually going to make it easier and more liquid, but in fact, it can actually be a detriment to the growth of some of these entrepreneurial ventures. So I think understanding the people with the core skill sets, when I'm looking at an investment opportunity, and the mining sector, I think it's the most glaringly obvious, because you've got, and I learned this many, many years ago living in South Africa, when I would literally see $100 to $300 million deals every other week by very, very, very sort of, let's just say, SME-minded business people. And that's an interesting gap in this market. Now, with what we've got here, with preeminent sort of figures with all of these multiple skill sets, I think perhaps if it is an underexplored area for the Caribbean, that's probably a good thing. because that means, of course, we can put the right parameters, the right dream team in place with the right experts before making these bold moves. Because again, where I see it, and I think Ellis, you probably touched upon it as well, we're going to see a lot of, you mentioned gold, but it'll be other areas of the mining areas, of mining companies. I think that there's going to be a lot of financial distress among some of these companies that were poorly structured from a financial standpoint, because their mindset is either there's the less than ethical ones that just want to pump and dump, and then the ethical and well-intended ones, their mindset is list, make money. They don't know about structuring things. They don't know about working with the banks. They don't know how to bring in family, institutional, or other structures. And then there's, of course, the governance component that if Bob wanted to chime in at any part, he could, because he could speak with more authority than me. But the governance I find as well in these smaller companies, but they've got rich physical assets. I think that's a very interesting part to consider, and where the Caribbean, I think, now has a good opportunity to not make the same mistakes as some other nations or regions have.
Mm-hmm. Okay, thank you very much, Peter. So I am going to invite our panelists to give some closing remarks now as we head into the last 5 minutes of this panel discussion. But I really like what has emanated out of this, in terms of we all don't need to be total experts in all of these areas. It is the collaboration, it is the partnership that we get into that could help in making these things that much more successful. So Jeffrey, may I start with you, then Mariano, and we'll end with Ellis with some closing remarks.
Yeah, if I'm wrong here, I'll be embarrassed, but I think there are 13 sovereign nations in the Caribbean, and each one can be a laboratory for wealth creation. And the people know where we want to go. We have a goal and an idea, and how we get there, many ways to do it. And I encourage everybody to check out each other's successes and look at what the components you have are. And in many cases, a way to build that machine is to look into the mining space. And there's a lot of money to be made in that, and there's a lot of uplifting to do. And each it's up to each place to do what's best for them. But there is an opportunity, and the political capital needs to be there. There's plenty of money in the world for it. There's plenty of expertise in the world for it, and there's no reason why it can't be done smartly, cleanly, and quickly. And these are the types of things that you can use to lift and uplift and create enormous amounts of wealth. And I am really excited about the potential and the people, and I'm happy to have been here to do this and to speak to it. Really made me think about the potential again after Haiti. We hadn't spent as much time there as we need to, and I think that with smart people in place, a lot can be done. And they're all just, each one of these places is a laboratory for potential success, and working together is the only way to do it. That's all I have to say about that.
Thank you, Jeffrey. Mariano?
Well, what is successful is what is seen to be successful, and what is successful. And the Caribbean has generated a number of success stories. They are not well known because the entrepreneurs with them don't want to be known, because they can quickly become targets from a political perspective, as well as from other perspectives as well. Living in the Caribbean does have its dangers. At the same point, I think that from a public policy perspective, I think Caribbean governments need to rethink their policies, where the method of industrialization, or also the method of development, we've perhaps been caught into a generation which has passed us by. I thought that Ellis put that very, 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 very firmly on the table, and that the opportunities are there. But what is required is a view, a vision, and to see the opportunities to basically can. And people will collaborate with you from wherever you are. Money knows no politics.
Thank you very much. A very profound way to end, Mariano. Ellis?
Very profound man, Mariano. Well, as I mentioned before, my trip to London to speak with Minds and Money organically through Peter brought me to this discussion right here virtually in the Caribbean, where there's a great deal of opportunity. And while there have been many successes there, the world doesn't know about them. And had I not plugged into this event during the last few days and done a little bit of homework, I wouldn't have known. So although I was aware of EMX's outreach in Haiti, and I think we have to, if we don't do this, shame on us. We have to take advantage of this day and this opportunity for all of us key people to meet and grow something here organically. And if there are investors in the Caribbean that don't want to be known, as long as they're above board, fine. You know, they can continue to help themselves and help others by aligning themselves with us, and we'll be the public face. I have no problem with that. That's what I do for a living. So let's continue the dialogue. Let's build something substantial out of this, along with our company and EMX and anyone else who wants to join us, any of our peers or competitors. You know, let's just bring the world to the Caribbean. It's not just a great vacation spot. It's a great place to create.